Hey guys, welcome everyone for today's Tradfi and Bitcoin session. Today we will be discussing about like a comparison between Bitcoin and traditional assets as a collateral security. So today's discussion will be primarily based on India related collateral security, what practices followed in India. So let's go ahead. So what are the types of loan in India basically which are given? So there are two types of loans, fund-based and non-fund-based credit. In fund-based, what we mean by fund-based is that there is an outlay of funds. Whenever the loan is sanctioned and disbursed, there is outlay of fund. In non-fund-based limits, there is no immediate outlay of funds. The outlay of funds is at a later date, such as letter of credit and bank guarantee. In fund-based limits, the loans which are given, which are for long term, are called term loan, which can be business loan, a housing loan, vehicle loan, personal loan. These are term loans. And a short duration for working capital facility of a company, the loans which are given are cash credit, overdraft, working capital, demand loan, bill discounting, etc. And in personal loan, we have loan against property, loan against FD, gold loans. These are type of loans which are given in India in Indian context. So what are the collateral security which is taken in India? So the presently the assets which are taken in collateral are traditional assets. So what do we mean by traditional assets? Traditional assets are collateral security which are well understood, easy to value, and relatively stable. These are and which have been banks have been taking this collateral security uh, like from the beginning. So these are, we can call it as the traditional assets. So what are the common types of assets which include? Uh, First is primarily real estate, which can comprise of land, building, residential or commercial. So total amount of loan which is given in India, around 55 to 60% of the collateral is real estate. So majority of the collateral which is taken in India is real estate. Second is our movable fixed asset, which includes plant and machinery, vehicles, equipment. This is around 10 to 15% of the total collateral security. Then there comes gold, which is given for agricultural gold loans or personal gold loans. Then there are financial assets like FDs, NSC, PPF, insurance, securities, etc. And current asset like inventory, receivables, which are taken as collateral security. So real estate is the major chunk of the collateral which is taken, which is around 55 to 60%. Then movable fixed asset is 15%, and rest of the things are around 5 to 10% of collateral security. The real estate which is taken by the banks as collateral is by far most complicated kind of a collateral which is there, because it has so many moving parts. So a lot of compliance, lot of things has to be done to be taken that thing as collateral security. And most of the other collateral security also are cumbersome, but they lot of the process which goes through in taking real estate as collateral security, more or less same things are done in other collateral securities as well, but they are for a limited things are to be done. So we will cover today, in today's session, we'll cover real estate because it is the biggest collateral taken, around 55 to 60%. And by far it is the most complicated thing to take as a collateral. Any questions in this, Rajendra, Vaishnav?
No, I think so far.
No, it's okay.
Yeah. Okay, so we'll go ahead. Obtaining real estate as a collateral. So basically, first thing which we do is take KYC and check basic eligibility. If it is a housing loan which we are giving, then we check whether the EMI and MI ratio is there or not. If it is a business loan, then we check for turnover, profitability, cash flow, leverage, and all those ratios which are there or not. Once we check KYC and basic eligibility is proper, we go ahead with our next step, that is check and collect all the property documents. Uh, Whenever we take property as a collateral security, we have to check the property is genuine, whether the documents are proper or not, whether, and for that we have to collect the property documents and check and verify them. Sorry. We have to do legal due diligence and title verification for the last 30 years. Legal due diligence is done from an impaneled advocate, and he checks the encumbrance and the title of the property for last 30 years. This establishes a clear and marketable title over the property. Whether the owner has the clear or marketable title of the property, and fees for this due diligence is paid by the borrower. Then we take the valuation report from approved valuer. The valuation report fees is also paid by the borrower. Then we check internal regulatory and compliance and internal compliance for the property. Uh, for example, the property should not be an agricultural property, or it should not be a government land, because if it is an agricultural property, it cannot be action cannot be taken under the SARFAESI Act under for this kind of property. Only agricultural loan can be given against agricultural properties. Ownership pattern, whether the ownership is single, joint, and ancestral, or HUF. So if the ownership is single, uh, then the title is straightforward. You ensure that the person who is signing is the owner of the property. But if it is a joint ownership, then all the co-owners must consent and sign the mortgage deed. If it is an ancestral property, then the rights of the other people who are in the family must be considered. So it becomes difficult if it is other than single or company owned property. In company owned property also it is straightforward. The company is the owner, and the authorized signatories must sign the uh, mortgage deed with a board resolution. So if it is a single or company owned property, it is fairly simple. But if it is joint, ancestral, or HUF, additional care has to be taken. That property should be in a notified area for an equitable mortgage to be done. If uh, if uh, if it is not in the notified area, then we have to seek other ways, like if we have to do registered mortgage for the property. Notified area is designated area by the government where a particular equitable mortgage can be done. We next steps for obtaining real estate as collateral. Any questions in this? And we can go ahead. We can go ahead, I think. Sixth is the creation of mortgage. There are two types of mortgage: equitable mortgage and registered mortgage. Equitable mortgage is a mortgage where we deposit the original title deeds with the bank, usually which is at the notified town for creation of security. Uh, Most common type of loans which we do under these are housing loans, loan against property. The stamp duty for equitable mortgage is, since it is a state subject, it differs from state to state. So it is from 0.1% to 0.3% of the loan amount. This has to be paid by the borrower. If we have to do registered mortgage, if equitable mortgage is not permitted because of some reasons, then we go for registered mortgage. Here, uh, whenever the registered mortgage deed is prepared and signed by all the parties, which is bank and the owners of the property, stamp duty is to be paid, which is around 0.5 to 2% of the loan amount. And after execution of registered mortgage, uh, we have to go to sub-registrar for registration of the deed. That's why it is called a registered mortgage, because it has to be the deed has to be registered with the registrar. After creation of the mortgage, we have to register the charge with authorities like SARSAI, and if it is a company, then we have to additionally register with Register of Companies. Then we have to take property insurance, which includes fire and all those insurance with bank loss. Bank loss means that if something happens to the property, the insurance company will pay the bank whatever the insured amount is there. So this property insurance has to be done by the borrower. Then there is disbursement of loan. If the loan is repaid, and so after the loan is repaid, the process is that we issue closure letter and we return the original documents in place of EN. If it is a registered mortgage, we execute a release date. So this is a process where, in case of property, when we do this. These are the steps which has to be done. Any questions so far? Yeah. Okay. So
No,
in
no.
this process, where loan is repaid by the borrower, but sometimes the loan is not repaid by the borrower. So what is the recovery process done in case of the borrower who defaults? If principal or interest is not paid for 90 days, the account is classified as non-performing asset, NPA. If once the account is classified as NPA, bank issues notice, 60 days notice under Section 13(2) of SARFAESI Act. Then banks takes the possession of the property under Section 13(4). The possession can be there are two types of possession. There is a symbolic possession, where bank issues notice of possession of property in newspaper, and there is a physical possession, where bank physically take the keys from the borrower. If there is a peaceful possession, the borrower is ready to give the possession peacefully, then we take the keys, we document it, and we take the possession. Otherwise, bank seeks help of district magistrate if peaceful possession is not given by the borrower. After the possession is taken, we do valuation and fix the reserve price. We issue 30 days notice before auction. So auction of the property is as is varies and as is what is basis. So whatever is the state of the property legally and physically, that is bought to be bought by the borrower. Bank does not take uh, uh, any responsibility on that front. So the new buyer has to check everything, and he has to take. Higher bidder wins. If no bid is submitted, then the process is repeated and re-auction is done. Then bank issues sale certificate under SARFAESI Act and hand over the possession of documents. Sales proceeds are appropriated. If there is shortfall, then bank proceeds against the borrower, guarantor, or other assets through DRT or courts, etc. So this is the process of where property is when the property is taken by the bank. So in every step, the cost of taking the property as collateral increases. In every step, the time which is required for to dispose of the property and recover the loan increase, because if everything goes as per plan, everything is perfect, then you require minimum 150 days to from the account becoming NPA to recovery of the asset. So this is a very complicated kind of process for real estate, and real estate or property is the primary collateral which is taken by bank. And this property which is taken by bank is on an assumption that the proper prices of the property will always increase in the future. If there is some downturn in property market, or property is not fetching so much value, then the whole credit system collapses, or it is on the shaky ground. So this is the situation in which the banks are, and it is very difficult for banks to lend at a lower interest rate or give a better pricing to the borrowers, because they themselves are doing have to do so much process and have to uh, take on so much of risk. Yeah. So any questions till this slide? Kushal?
Hey, Amol, some
Yeah.
voice issue is there. Connection.
Yeah. Sorry. Is it okay now? Hello. Is it okay? Hello. Hello.
Amol, you
Hello.
sound okay.
Rajesh. Yeah. Yeah. It is okay. So, any further questions? Like in this, this is a normal process which is done for real estate as a collateral security. For if we take gold, if we take other things as collateral, like vehicle and all those things, the process is small, but it is also complicated and time consuming, and and the time taken from issuing notices and collecting the asset and disposing it off, the value of these assets generally reduces. If you have given a car loan and you have taken possession of the car and you are selling it after 3 to 4 months, the car uh, definitely goes down in value. In property, that is not the case, but in property, what happens is that if a bank is going to sell that property, then the new buyer definitely wants to have that property at a lesser discounted price. He does not want to give market price for that property. So this is the what we can say shortfall of the traditional assets. Now we can go to next slide, where we discuss advantages of using Bitcoin as a collateral. So I assume that everybody knows Bitcoin and its properties: limited supply, and confirmation in 10 minutes, verifiability, and all those things, decentralization. So I will not discuss the properties of Bitcoin, but advantages of using Bitcoin as a collateral: liquidity and speed of realization. So just now we checked, if we want to sell some property, then we have to like wait minimum 150 days. And generally it is not. If everything goes well, if everything does not goes well, then the time period increases. If the borrower sends a notice against our surfacing notices, then the time period increases, and for all the courts and auction process. But in Bitcoin, it can be sold 24/7 on global exchanges. Settlement is typically in minutes to hours, not months, as we have seen in real estate. Very useful for quick recovery if the borrower defaults. Real estate is very illiquid, and it requires like marketing on the part of bank to go and find buyers for the property. Regular inspection has to be done. We have to secure the property when we have taken possession. We have to do all the registrations and all those things. If we have to go through, bank has to go through process of surface court and auction processes. So it is quite it is not as liquid, and speed of realization is also very low compared to Bitcoin. In title and income rents issues. So Bitcoin, as we know that the owner of the key is the owner of Bitcoin. Here in Bitcoin, we don't have title deeds or mutation or income rents certificates. Owner is just simply a control of private key. There is no dispute in like in fake documents or multiple mortgages, or if someone has done illegal construction on property, these kind of disputes are not there. It is clear cut. If you have the key or you don't have the key, that is only distinction. If the borrower transfers Bitcoin to bank's address, then they have the Bitcoin, and bank immediately got the possession of Bitcoin. They don't have to go to any legal, uh, like to registrar or any thing to take the possession of the Bitcoin. In real estate, we have risk of defective title, disputes, or we have to do legal search, valuation reports for checking the encumbrance and title of the property. Next is easy valuation and mark to market. Since Bitcoin has a live market price across exchanges, lender can mark to market the collateral in real time. Automated margin calls and top up requirements can also be built into the systems. So if the price of the collateral or Bitcoin increases, automatically we can give, a bank can offer more loan to the borrower. In real estate, the valuation is subjective. It depends on valuers. It usually is updated every 2 to 3 years, not like Bitcoin. It is not a real time market. Market can change like sharply without uh, immediate reflection in the records. If there is certain decline in the property prices in particular area, banks will know it after like 1, 2, or 3 years, maybe even maybe that price has been declined, and they have to take additional collateral. Divisibility and flexibility of collateral. Bitcoin, as we know, it is infinitely divisible. Collateral can be partially liquidated to cover shortfalls without selling the whole holding. Loan sizes can be matched precisely as per the collateral value. Real estate is not divisible. We cannot sell part of a real estate. It often requires a sale of entire property. So it is not divisible and flexible. Lower operational cost and transaction cost. As we have seen with real estate, what kind of cost we have to incur for taking that property as collateral. Like we have to do stamp registration, taxation, maintenance, insurance, and valuers charges, and legal charges. All we have to do to take that property as collateral. But in Bitcoin, we don't have any stamp duty registration. Property tax is not there. We don't have to pay any maintenance charges. We don't have to do any technical inspection, valuation, or storage or custody cost is very minimal as compared to real property. Bitcoin is programmable, control, and automation. We can build in multi-sig arrangements. We can build in automatic margin call and liquidation checks, LTV checks. Interest collection can be automated. Real estate is not programmable. You have to manually do all the things. It requires physical possession and physical notices, auction, etc. Geographical neutrality. Bitcoin is borderless. Bitcoin can be accepted as collateral from borrower in any country. Real estate is tied to a local jurisdiction. Uh, Even if in a bank, if suppose we are in Mumbai, and a Mumbai branch will not give a loan against a property which is in, let's say, Chennai. So that geographical restriction is there on property. But in Bitcoin, no such restriction is there. So these are the advantages of using Bitcoin as collateral. I will just wait if anybody has questions. Rajendra? Yeah, I think there are no questions in this. I will go to next slide. Regulatory framework in India. So in India, there is no current regulatory framework that permits Bitcoin to be accepted as collateral. RBI presently does not recognize Bitcoin as approved form of collateral security, and RBI has to lay down norms in regarding valuation, creating of charge, margin requirement for such collateral. So presently, there is no regulatory framework to for Bitcoin to be accepted as collateral. But privately, if some private party wants to take it as collateral, then there is no restriction as such. So this was a brief like introduction of how Bitcoin is a much better, much superior collateral in traditional finance, in banking, than normal existing assets, which may be real estate, which may be maybe gold or securities or anything like that. It is hundred times more better asset to be taken as collateral. Only regulatory hurdles are clear. If RBI, if the government comes with a proper regulation in these matters, then these collateral can be taken as a security against the loans which can be given, and it will reduce the cost of giving loans by the banks, and it will reduce the overall risk profile of the credit portfolio which is given against the loan, which for the loan which are given against Bitcoin. So that was the case. That is the case I make for Bitcoin, which is a pristine collateral, a best collateral to be had by banks to like move forward, and all the other collateral assets which are presently there, they with the passage of time they will not be accepted as collateral by these institutions. Yeah. So that was the presentation till now. So this floor is open to discussion if anybody has any questions.
Amal, Vaishak here. What is the current
Yeah.
status at the in US? Because I think they would be the leaders if something like this has to make a significant progress, in my opinion.
Yes, correct. So they in US they are starting to allow Bitcoin to be taken as a collateral security. So I have to check the exact notification by their regulators, but they are like positive, and they have started to take Bitcoin as a collateral.
Okay. And there were also some chatter that I had heard months back that you can perhaps to take home mortgage, you can use Bitcoin as the direct collateral. This is exactly what you're talking about, right?
Yes, yes. So for any kind of loan, if you go
Mhm.
give Bitcoin as a collateral, uh, then they will give you the money, and Bitcoin is a collateral, not like if you want a loan for your business. Presently,
Mhm.
what is done is that there is a primary collateral. Like if you are buying some machinery, then machinery will
Mhm.
be a security, and additionally, bank may take some property as a collateral.
Right.
But in case of Bitcoin, they won't take property or your machinery as collateral. They will take the Bitcoin. They will decide their LTV as per their requirement, internal guidelines. If it is 50% or 60%, so for $100,000 of Bitcoin, they will give $60,000 USD worth of credit to you directly. They may check some basic things like CIBIL and all those things, and they may not check your repaying capacity like it is done in traditional like presently. Like if you're a business, they will check your profitability and all those things, but they may check it, but they may not be so concerned because they are more than 100% collateralized, so they know that their loan will be coming back. Even if there is some delay in repayment, they can sell part of the Bitcoin and they can clear that part of the loan.
Right, right. So it has the most pristine collateral in
Yes.
in that sense. But would you say that like how for housing loans and other things, the interest rates are floating depending on what the economic conditions are, both in US and in back home and domestically, the whatever regulator decides at that point of time. So even Bitcoin case, that would still go that would still be considered as the norm. Would you say that floating interest rate would come into picture, or something else might maybe more fixed?
I think interest rate will be there. Basically, I think that once Bitcoin comes into but once Bitcoin comes into picture and there is a free market around, then there won't be a regulatory pressure to keep certain kinds of product or give certain kinds of product. The market will decide what the market wants. So if somebody is giving more than 100% collateral in the form of Bitcoin, which is very pristine and can be liquidated anytime, and he wants certain kind of a product, like it has to be variable or it has to be fixed, and banks, since their uh, profile, like risk profile, is considerably reduced with Bitcoin backed loans, so they may provide this kind of products to their customers.
Okay, okay, okay. It would be completely dictated by the free market in that sense.
And I think that the interest rate which normal uh, as a normal collateral which banks are charging, since their risk profile is reduced, their expenses are reduced to maintain this collateral, and doing all these things which are part and parcel of taking physical asset as a collateral, they may charge lower interest rate for people who are giving Bitcoin as collateral security,
Hmm.
because they don't have to open a physical branch anywhere for taking property as collateral. You have to have a physical branch because the physical documents has to be collected, has to be checked, has to be stored. You have, when if you have to do equitable mortgage, you have to have a branch in that specified area. Only then it is possible to take that as a collateral. And geographical restriction, is always there, because if I am sitting, my branch is in Mumbai, I won't be comfortable giving some loan for a collateral for a property which is located far away, because it takes away a lot of effort and a lot of time to verify the property, inspect the property, and all those things. And moreover, the laws and the of different of jurisdictions are different. So if it is in some other state, they may have some different rules and laws. So this branch in Mumbai or in Maharashtra won't be able to take that property as collateral, or won't be like willing to take it as collateral. So there is a restriction in collateral from what it can be used, or for what loan it can be taken, or for in what jurisdiction it can be taken.
Right, right. True, true.
So I think Bitcoin is a very good collateral, and it may come in the future that uh, banks are giving like encouraging people to give Bitcoin as collateral, because it suddenly it reduces their operation cost, because they don't have to open a lot of branches. They just have to open an app. They just have to create an app. People will do their KYC like we do it in the exchanges. They will deposit their Bitcoin, and as per the bank guidelines of the LTV ratio, they can give 50 or 60% of the loan as collateral, like 50 or 60% of the money to directly to their bank accounts. And one more question I get asked regularly is why people will take loan against Bitcoin. They can directly sell their Bitcoin. But my answer to this is that Bitcoin, uh, people, if they sell their Bitcoin, that will be a taxable event. They have to pay capital gain tax on that transaction. But if they take loan against Bitcoin, it is not a taxable event, and they can use that money and repay that loan, and the interest which they serve for that kind of a loan can be treated as an expenditure in their books of accounts. So they don't have to sell their asset. Hope it like clarifies.
True, true. That's also one significant advantage, indeed.
Like if like Indian government do not become proactive and come with regulations for Bitcoin, Bitcoin as a collateral, Bitcoin as an asset, then I think capital will flow out of the country, because with Bitcoin, MicroStrategy or other companies in Japanese market or other markets, they are coming up with products which gives very high returns. Uh, uh, so it is possible that capital will be flow from Indian market to these countries if our government is not proactive enough to bring regulations in these scenarios. Yeah. Any other questions, Rajendra?
No questions. No questions.
Yeah. Okay. So that was our topic for today. So, and if you have any further questions, like you can just ask regarding this topic. This is a wide topic, and it is very interesting, like business case